Before we dive in, it is critical to understand that the content in this video is for informational and educational purposes only. It should not be construed as financial, investment, legal, or tax advice. The cryptocurrency market is highly volatile and speculative. You should always conduct your own thorough research and consult with a qualified professional before making any financial decisions. I am not a financial advisor, and this presentation does not constitute a recommendation to buy, sell, or hold any asset. Your financial future is your responsibility. Let me tell you about a guy named Mark. In 2021, Mark was on top of the world. He'd been scrolling through social media and saw a video about a new, guaranteed moonshot crypto coin. The hype was electric. The comments were filled with rocket emojis and people claiming they'd already doubled their money. So Mark downloaded a wallet, figured out how to buy it, and threw in $10,000, more than he could really afford to lose. For 1 week, he felt like a genius. His investment doubled. Then it tripled. He was checking his phone every 5 minutes, watching the numbers climb. He started daydreaming about paying off his car, about a down payment on a house. He felt like he had discovered a secret cheat code for money. Then one Tuesday morning, he woke up, brewed his coffee, and opened the app. His heart stopped. The chart had flatlined, a single vertical red line straight to zero. He refreshed. And again, nothing. It was all gone. The developers had vanished. The website was offline. The social media accounts were deleted. Mark didn't just lose $10,000. He lost his confidence. He felt foolish. He fell for a trap that snares thousands of people every single day because he mistook hype for information. He didn't know where to look for the real, credible, and unbiased truth. Does that story sound familiar? Maybe not the specifics, but the feeling behind it? That mix of FOMO, the fear of missing out, and the paralyzing fear of being the one left holding the bag. You see headlines about Bitcoin hitting a new all-time high. Your coworker mentions something about Ethereum and smart contracts. You scroll through Twitter and see a dozen different coins being shilled as the next big thing. It feels like you're standing at the edge of a technological and financial revolution, but you've been given no map, no compass, and no instructions. The information isn't just scarce. It's the opposite. It's a fire hose of noise, and most of it is designed to do one thing: separate you from your money. You're bombarded with conflicting advice, impenetrable jargon, and self-proclaimed gurus in rented Lamborghinis telling you to buy the dip on a coin that was invented yesterday. It's overwhelming, it's confusing, and frankly, it's dangerous. You know you need to learn, but the question that stops you dead in your tracks is, where? Where do you even begin to learn about this stuff without getting scammed or drowning in technical details you don't understand? That is the exact problem this video is going to solve for you. Forget the hype. Forget the moonshots and the rocket emojis for a minute. This video is your map. It is your compass. Over the next several minutes, I am going to give you a curated, vetted, and battle-tested list of the absolute best online resources for learning about cryptocurrency. We are going to cut through the noise and focus only on the signal. I've spent years sifting through the garbage, falling down the rabbit holes, and filtering out the low-quality content to find the genuine gold mines of information. These are the resources that will take you from a complete beginner who can't explain the difference between Bitcoin and a blockchain, to someone who can confidently research a project, understand its value, and make informed decisions for yourself. This isn't about telling you what to buy. This is about teaching you how to think. It's about giving you the tools to build a powerful foundation of knowledge, so you never have to rely on a random guy on the internet for financial advice again. We're going to cover everything. We'll start with the absolute basics for day one beginners. Then we'll move into the tools the pros use to analyze the market and track data. We'll look at the newsletters that deliver brilliant insights directly to your inbox. We'll even cover the crucial resources for security, how to keep your hard-earned assets safe from hackers and scammers. Think of this as your personal guided curriculum for crypto mastery. By the end of this presentation, you will have a complete toolkit of websites, platforms, and creators that will serve you for your entire journey into this space. You won't just know more about crypto. You'll know exactly where to go to continue learning forever. You'll be able to spot the red flags of a scam from a mile away. You'll understand the vocabulary that once sounded like a foreign language. You will finally be in control. The goal here is to replace fear and confusion with confidence and clarity. So, if you're tired of feeling like you're on the outside looking in, if you're ready to actually understand this technology that is reshaping our world, and if you want to build your knowledge on a foundation of rock instead of sand, then you are in exactly the right place. So where do we start? The single biggest mistake people make is jumping straight to the complex stuff. They try to understand advanced trading strategies or decentralized finance protocols before they even understand the absolute fundamentals. It's like trying to get your PhD in physics without ever learning basic algebra. It's a recipe for disaster. You get frustrated, you get confused, and you give up. Or worse, you make a costly mistake. So our journey begins at the only logical starting point: building a rock-solid, unshakable foundation. We need to find resources that are specifically designed for the absolute beginner, that assume you know nothing, and that build your knowledge brick by brick, concept by concept, in a way that actually makes sense. We're not looking for quick tips or hot picks. We're looking for education. Real deep foundational learning that will pay dividends for years to come. The goal of this first step isn't to get rich. It's to get smart. The riches, if they come, are a byproduct of being smart, not the other way around. The resources in this first category are the ones you recommend to your parents, your friends, or anyone who comes to you and asks that simple, terrifying question. So what exactly is Bitcoin? They are the patient, methodical teachers in a world of screaming, frantic salesmen. They prioritize clarity over clicks and substance over style. Finding the right starting point is arguably the most important step in this entire process. It sets the tone for everything that follows. Get this right and you're building your house on bedrock. Get it wrong and you're building on quicksand. So let's lay that first, crucial stone in your foundation. Let's talk about the best all-in-one platforms designed to take you from 0 to 1. When you first learn to swim, you don't just hurl yourself into the middle of the Pacific Ocean. You start in a swimming pool. It has clear boundaries: a shallow end, a deep end, and most importantly, a lifeguard on duty. The platforms we're about to cover are the swimming pools of the crypto world. They are meticulously designed, all-in-one ecosystems where you can learn the theory, and then immediately dip your toes in the water by buying your first few dollars of crypto, all within the same safe, guarded environment. First up is the undisputed heavyweight champion for American beginners, Coinbase, and specifically, its integrated learning module, Coinbase Learn. Think of Coinbase as the Apple of crypto. It's clean, it's intuitive, and it's arguably the most user-friendly on-ramp that exists. They've spent a fortune making a complex process feel simple, and that philosophy extends to their educational tools. But here's their masterstroke, the feature that has onboard millions of users: Learn and Earn. The concept is genius in its simplicity. You watch short, animated videos explaining a specific cryptocurrency project, say the Graph or Fetch.ai. These videos are usually just a few minutes long, breaking down what the project does and the problem it solves. After the videos, you answer a few simple quiz questions. Get them right, and Coinbase deposits a few dollars of that exact crypto you just learned about directly into your account. For free. Now it's easy to dismiss this. You're only earning a few bucks here and there. But that misses the entire point. This isn't about the money. It's about the psychology. First, it completely removes the initial friction and fear of buying something. You didn't have to risk your own hard-earned cash. You were given a small stake. Second, it gamifies learning. Creates an instant feedback loop of watch, learn, earn. It's a dopamine hit that rewards you for acquiring knowledge. And third, and this is the most powerful part, it forces you to diversify your perspective from day one. Most beginners hear about Bitcoin, maybe Ethereum, and that's it. They have tunnel vision. Coinbase Learn forces you to learn about Oracle networks, decentralized indexing, AI protocols. You're suddenly exposed to the sheer breadth of what's being built in this space. You now own a tiny piece of 10 different projects you'd never have heard of otherwise. And because you own it, you're now psychologically invested. You're more likely to follow its progress, to read its white paper, to understand its purpose. Coinbase isn't just giving you free crypto. It's giving you a curated portfolio of homework assignments. It's a guided tour of the crypto universe, and you're getting paid to take it. It is, without a doubt, the single best starting block for someone who is completely overwhelmed and doesn't know where to begin. But after you've learned to doggy paddle in the shallow end with Coinbase, you might start looking toward the deep end, where the serious swimmers are doing laps. That's where our next resource comes in: Binance Academy. If Coinbase Learn is a fun, interactive high school elective, Binance Academy is a free, open-to-the-public university library. Binance is the world's largest crypto exchange by volume, and their educational arm reflects that scale and global ambition. There is no learn and earn here. There are no flashy animations promising you $3 of a new altcoin. The reward at Binance Academy is knowledge itself. Pure, unadulterated, and incredibly deep. The sheer volume of content is staggering. You can find beginner-level articles explaining what is Bitcoin, right next to advanced PhD-level deep dives on zero-knowledge proofs or the intricacies of sharding. They have a massive, searchable glossary that will become your best friend. Anytime you hear a term you don't understand, hash rate, impermanent loss, MEV, you can bet Binance Academy has a clear, concise article explaining it. What sets it apart is its commitment to neutrality and technical depth. The articles are written like encyclopedia entries, not sales pitches. They cover topics far beyond specific coins. You'll find entire learning paths dedicated to blockchain fundamentals, economics, security, and trading strategies. You can learn about candlestick chart patterns, the history of money, and how to spot a phishing scam, all in one place. This is where you go when your why questions start getting more complex. Why does proof of work use so much energy? How is it different from proof of stake? What are the technical trade-offs? Coinbase might give you the what, but Binance Academy gives you the why and the how. It's less of a guided tour and more of a massive, well-organized archive where you can forge your own path based on your own curiosity. It's the resource you'll graduate to once you're no longer satisfied with the simple answers, and you start craving a more fundamental understanding of the technology itself. Now, between the hyper-simplified, gamified approach of Coinbase and the dense academic library of Binance, there's a fantastic middle ground. It's a resource from one of the oldest and most respected exchanges in the game, Kraken. And their educational portal, Kraken Learn, has a distinct personality. If Coinbase is the friendly new teacher and Binance is the university professor, Kraken is the grizzled, wise old sensei who prioritizes discipline and fundamentals above all else. Kraken has built its brand on security and reliability, and their educational content reflects this. While they cover all the basics, you'll find a much heavier emphasis on practical, real-world knowledge that keeps you safe. They have extensive guides on how to spot scams, how to secure your accounts with two-factor authentication, and deep dives into the differences between various types of crypto wallets. Hot wallets, cold wallets, hardware wallets. This is critically important. Learning about exciting new projects is fun, but none of it matters if you get your account hacked or send your funds to the wrong address. Kraken's content feels grounded and responsible. It's less focused on the speculative moonshot potential of crypto and more focused on building a durable, long-term understanding. They produce in-depth crypto guides that read like chapters in a textbook, covering everything from Bitcoin to Cardano in a way that's more comprehensive than a Coinbase video, but more accessible than a technical white paper. Think of Kraken Learn as the place you go to build good habits. It's the dojo where you practice the boring, repetitive, but essential moves that will one day save you from getting knocked out. It teaches you not just what crypto is, but how to be a responsible citizen of this new digital economy. So we have 3 incredible starting points. Coinbase for the guided, gamified introduction, Binance for the deep academic dive, and Kraken for the security-first, practical fundamentals. You could spend months just within these 3 ecosystems and come out with a stronger knowledge base than 99% of people in the market. They are the safe harbors, the guarded swimming pools. But they all share one crucial, inescapable trait. You have to remember what they are. They are businesses. They are centralized exchanges whose ultimate goal is for you to trade on their platform, use their services, and become a part of their ecosystem. And that, by necessity, colors the information they provide. Think of it like learning about cars exclusively from the Ford dealership. You'll learn a ton. You'll learn about horsepower, torque, fuel injection, and safety ratings. You'll get a fantastic education on the fundamentals of automotive engineering. But every single lesson, every pamphlet, every conversation will, in some subtle way, be designed to lead you to the conclusion that a Ford F-150 is the best truck on the market. They're not necessarily lying. They're just presenting the information that's most favorable to their product. They're not going to spend much time highlighting the new features of the Chevy Silverado or the Ram 1500. It's the same with these platforms. Coinbase Learn is an amazing tool, but you're not going to find a Learn and Earn module for a project that is a direct competitor to a service Coinbase itself is trying to launch. The information is curated. It's a walled garden, a beautiful, educational, and incredibly valuable garden, but a walled one nonetheless. And understanding that distinction, the difference between a platform's curated education and the raw, unfiltered information of the open ecosystem, is the single most important leap you can make in your learning journey. It's the moment you decide to leave the swimming pool and walk toward the vast, chaotic, and beautiful ocean. It's time to learn how to read the tides and the currents yourself, without a lifeguard. And for that, we need to turn to the neutral third-party observers, the crypto-native news outlets, the on-chain data explorers, and the community-driven information hubs that have no single product to sell you. Let's start with the journalists of this new digital frontier. If exchanges are the banks, these are the newspapers, the reporting agencies that hold them accountable. The first and perhaps most well-known is CoinDesk. Think of CoinDesk as the Wall Street Journal of crypto. It's where you'll find market analysis, regulatory news, and the kind of in-depth reporting that moves markets. They're the ones who published the balance sheet that exposed the fatal flaws in the FTX empire, kicking off one of the largest collapses in financial history. That wasn't a rumor on social media. That was investigative journalism. When you want the serious, buttoned-up take on what's happening, you go to CoinDesk. They maintain major indices like the CoinDesk 20 and run one of the biggest conferences in the industry, Consensus. It's a pillar of the crypto information ecosystem. Then you have its main competitor, Cointelegraph. If CoinDesk is the Wall Street Journal, Cointelegraph is more like a global, sometimes eccentric digital magazine. You can't miss it. Every article is topped with a unique, custom piece of art that gives it a distinct flavor. They cover a huge range of topics, often with a more international perspective, and they aren't afraid to dive into the cultural side of crypto, the art, the memes, the communities. Reading both CoinDesk and Cointelegraph gives you a fantastic stereoscopic view of the industry. One gives you the institutional perspective, the other gives you the cultural zeitgeist. For those who want to go even deeper, there are outlets like The Block and Decrypt. These are for when you're ready to graduate to the next level. They specialize in the nitty-gritty. They'll do deep dives into venture capital funding rounds, explaining who's funding what and why it matters. They'll publish research reports on the intricacies of a new DeFi protocol or the tokenomics of an emerging blockchain. It can be dense, but it's where you find the real alpha. The foundational knowledge that helps you understand not just what is happening, but why it's happening. The key takeaway here is the same as with any news consumption. Diversify your sources. Never rely on a single outlet. Read them all, notice their biases, and form your own educated opinion. But what if you don't want to just read what journalists are writing about the blockchain? What if you want to read the blockchain yourself? This is where we move from being a student to being a detective. This is where you get your hands on the raw, unfiltered, and immutable truth. We do this using something called a block explorer, and it is, without a doubt, one of the most powerful tools at your disposal. Imagine having a special password that lets you see every single transaction, in and out of every account at a major global bank. You can't change anything, you can't make a withdrawal, you can't steal anything. But you can see everything. You can see where the money comes from, where it goes, how much is in the vaults, everything. That's what a block explorer is for a cryptocurrency. It's a window into the chain of truth. The most famous one is Etherscan for the Ethereum blockchain. Go to etherscan.io. It might look intimidating at first, like a page of code, but it's simpler than you think. Every wallet has an address, and every transaction has a unique ID called a hash. You can paste either of these into the search bar and see its entire history. Let's say you hear a rumor that a massive whale just bought $10 million worth of a particular token. You don't have to trust the rumor. You can go to Etherscan, search for that token, and look at the recent transactions. You'll see it right there. A $10 million purchase, from one anonymous address to another, time-stamped and permanently recorded for the entire world to see. You can see which wallets hold the most of that token. You can see how many people own it. This isn't an opinion. It's not a news report. It's mathematical fact, recorded on a decentralized global computer. This is the verify part of don't trust, verify. When a project claims they have a certain number of users or a certain amount of money locked in their protocol, you can use a block explorer to check their math. Every major blockchain has its own explorer. There's Solscan for Solana, BSC Scan for the BNB chain, and so on. Learning to use one is like learning to read a financial statement. It's a fundamental skill for navigating this space. And for those who want to take it even further, there are on-chain analytics platforms like Dune Analytics or Nansen. Think of these as putting a superpowered data visualization tool on top of the block explorer. They allow data scientists to build dashboards that track almost anything you can imagine. Want to see the daily sales volume on the largest NFT marketplace for the last year? There's a dashboard for that. Want to track how much money is flowing between different blockchains? There's a dashboard for that. Most of these dashboards are free for anyone to view. You are literally getting access to the kind of data that, in traditional finance, would cost thousands of dollars a month from a Bloomberg terminal. This is the power of a transparent financial system. Now, we move from the objective data of the blockchain to the chaotic, subjective, and incredibly powerful world of community hubs. This is the Wild West. This is where fortunes are made and lost, where brilliant ideas are born, and where the most insidious scams are deployed. I'm talking about crypto Twitter, Reddit, Discord, and Telegram. Let's start with the loudest of them all. Crypto Twitter, or CT as it's known. CT is the real-time nervous system of the entire crypto industry. It is a fire hose of information, memes, arguments, and breaking news. If a major protocol gets hacked, you will hear about it on Twitter minutes, sometimes hours, before it hits a major news outlet. It's where project founders share their vision, developers debate technical standards, and venture capitalists announce their investments. Your mission, should you choose to accept it, is to tame this fire hose. You do this by carefully curating who you follow. Do not just follow accounts that scream about 100x gains. You need to build a balanced feed. Follow the founders and core developers of the projects you find interesting. Follow the researchers who publish long, thoughtful threads breaking down complex topics. And crucially, follow the thoughtful skeptics and critics. You need to hear the bear case just as much as you need to hear the bull case. Use Twitter's lists feature to organize these accounts. Have a list for developers, a list for investors, a list for news. This turns the chaos into a personalized intelligence briefing. But with this power comes extreme danger. Twitter is filled with impersonators. Scammers will create fake profiles that look exactly like famous founders or investors, and they will reply to your posts or send you direct messages offering a private sale or a special giveaway. Let me be crystal clear. 100% of these are scams. No legitimate person in crypto will ever DM you to ask for money or tell you to connect your wallet to a strange website. Be ruthless with the mute and block buttons. Your sanity depends on it. Next up is Reddit. If Twitter is for rapid-fire thoughts, Reddit is for threaded, long-form conversation. The main hub is the subreddit r/cryptocurrency, which is a massive community with millions of members. It's a great place to gauge the general sentiment of the retail market. The daily discussion thread is a chaotic but fascinating snapshot of what people are excited or scared about on any given day. But the real value of Reddit is in the smaller, project-specific subreddits. If you're trying to learn about Cardano, go to the Cardano subreddit. If you're exploring Avalanche, go to the Avalanche subreddit. This is where you'll find detailed tutorials written by community members, AMAs, or Ask Me Anything, sessions with the founding team, and people helping each other troubleshoot problems. But just like Twitter, be wary. The upvote system can be manipulated. Projects can use bots or coordinated groups to push their posts to the top, creating a false sense of popularity and consensus. Always read the comments and always maintain a healthy level of skepticism. Finally, we have Discord and Telegram. These are the inner circles. If Twitter is the public square and Reddit is the town hall, Discord and Telegram are the private clubhouses for specific projects. Nearly every crypto project has an official Discord server or Telegram group. This is where the most dedicated community members live. It's where you can join for weekly community calls, listen in on developer office hours, and sometimes even participate in governance by voting on proposals that affect the future of the protocol. It's the closest you can get to the heart of a project, but it is, by far, the most dangerous place for a newcomer. The moment you join a popular crypto Discord, your direct messages will be flooded with an army of scammers. They will use the same logos and names as the server administrators. They will message you with urgent-sounding alerts. Your wallet has been compromised. Click here to revalidate. Or you've been selected for a free airdrop. Connect your wallet to claim now. They are all lies. They are all traps designed to get you to click a malicious link that will drain every last cent from your crypto wallet. So here is the single most important piece of security advice I can give you for this entire video. The very first thing you should do when you join any crypto Discord or Telegram is go into your privacy settings and disable direct messages from server members. Do it. Do it now. You can still participate in the public channels, but you will cut off 99% of the scams targeting you. Join these communities for the information, but never, ever trust a stranger in your DMs. Now that your DMs are locked down, let's talk about the biggest, loudest, and most chaotic public square in crypto history. I'm talking about X, formerly known as Twitter. To be blunt, you cannot get a real-time pulse of the crypto market without being on what is universally called crypto Twitter, or CT for short. It is the central nervous system of the entire industry. It's where breaking news hits first, where project founders announce updates, where brilliant analysts share their research for free, and where the market's mood shifts from euphoria to terror in the span of a single meme. But let's be crystal clear. It is also an absolute minefield. It is a digital jungle filled with predators, con artists, and people who are paid to promote worthless projects so their founders can dump their bags on you. Your mission, should you choose to accept it, is to learn how to extract the invaluable signal from the deafening noise. Your first step is not to just follow accounts with 1 million followers. Follower count is often a meaningless vanity metric, easily bought and faked. Instead, you need to build a curated feed of different archetypes. Think of it like assembling your own personal board of advisors. First, you need the builders. These are the actual developers and founders of the projects you're interested in. Follow the founder of Ethereum, Vitalik Buterin. Follow the founders of Solana, Anatoly Yakovenko and Raj Gokul. Find the lead engineers for protocols like Chainlink or Uniswap. These people aren't typically talking about price. They're talking about technology, about scaling solutions, about the actual problems they are trying to solve. Their feeds are a direct look into the future of the technology, and they will ground you in what actually matters, not just what the price is doing on a Tuesday. Second, you need the analysts. These are the on-chain wizards and the technical chart masters. Look for people who share detailed, data-driven threads. They aren't just saying, "I think Bitcoin is going up." They're saying, "I think Bitcoin is going up, and here are 7 charts showing exchange outflows, long-term holder behavior, and derivatives market data to support my thesis." These people teach you how to think. They give you the frameworks to do your own research. They are your professors in the wild. A great analyst will always show their work, and even when they're wrong, you learn something from their process. Third, you need the skeptics and the critics. This might be the most important category. It is dangerously easy to get trapped in an echo chamber on crypto Twitter, where everyone is confirming your own biases. You must actively seek out the intelligent bears. Find the people who are thoughtfully and critically pointing out the flaws in a project or the risks in the market. They are not the same as the people who just mindlessly troll and say crypto is a scam. The good critics are just as data-driven as the good analysts, but they're looking at the other side of the coin. They will save you from catastrophic mistakes by forcing you to question your own assumptions. If your favorite project can't stand up to their critiques, it's probably not a very good project. Finally, you need the newsbreakers. These are the dedicated crypto journalists from outlets like CoinDesk, The Block, or Decrypt, and independent researchers who are constantly digging for scoops. Following them ensures you get the news, a major hack, a new SEC ruling, a massive partnership, the second it happens, not hours later when it hits the mainstream media. The killer feature to manage all of this is Twitter lists. Don't just dump everyone into your main feed. Create separate, private lists for builders, analysts, skeptics, and news. This allows you to check in on a specific category of information whenever you want. It's like creating your own personal, highly specialized news agency. It's a superpower for learning. Now the warning. Never ever, under any circumstances, click on suspicious links, even if they're posted by a verified account. Accounts get hacked constantly. Scammers will run fake airdrops or mints in the replies of popular tweets, using bots to make them look legitimate. If it sounds too good to be true, it is a trap designed to drain your wallet. The golden rule of crypto applies with triple force on Twitter. Don't trust, verify. Okay, so you've joined a Discord, you've curated an elite Twitter feed, but it's all still just people talking. It's opinions, announcements, and arguments. How do you get to the ground truth? How do you separate the hype from the reality? You do that by moving from qualitative information to quantitative data. And your new home for this is going to be a data aggregator website. The two giants, the Coke and Pepsi of the crypto world, are CoinMarketCap and CoinGecko. You need to bookmark both and you need to live on them. Think of these sites as the yellow pages or the Wikipedia for every single cryptocurrency in existence. When you hear about some new exciting coin, this is the very first place you go. Not to their website, not to their Discord, but here. Why? Because these sites give you the objective, standardized data stripped of all the marketing fluff. Let's say you hear someone on Twitter screaming about a new coin called Future Coin. They're saying it's only a penny, and it's going to be the next 100x gem. The old you might have gotten excited and looked for how to buy it. The new you, the smart you, goes straight to CoinGecko. The first thing you look at is not the price. The price by itself is the most useless piece of information in crypto. A 1-cent coin can be more expensive than a $10,000 coin. What you look for is the market cap. Market capitalization is the price of the coin multiplied by the number of coins in circulation. This is the true measure of a network's size and value. So you see future coin is 1 cent. But then you look at the circulating supply, and you see it has 100 trillion coins. You do the math and realize its market cap is already $1 billion. For it to 100x from here, its market cap would have to become $100 billion. That would make it bigger than Starbucks, bigger than Airbnb. Suddenly that 100x claim seems a lot less likely, doesn't it? You've just used one simple data point to see through the hype and protect your capital. But that's just the beginning. On these sites you can see the 24-hour trading volume. Is it real, or is it concentrated on some sketchy, unknown exchange? You can see the total supply and the max supply, which tells you how much the coin could be diluted by inflation in the future. You can find direct links to the project's official website, their white paper, and their social media accounts, so you know you're not landing on a phishing site from a bad Google search. You can see which blockchains the coin exists on. You can even find information on their code audits, which are reports from third-party security firms that check the project for critical vulnerabilities. Learning to navigate CoinMarketCap and CoinGecko is not optional. It is the fundamental skill of crypto research. It's like learning to read a stock ticker or a balance sheet in traditional finance. It's your foundation for everything else. Spend a few hours just clicking around on Bitcoin or Ethereum's page. Understand every single data field you see. This is your dashboard. This is your mission control. Once you've mastered these, you can start to peek at the next level of data analysis. On-chain data platforms. These are services like Glassnode, Nansen, or Dune Analytics. If CoinGecko is like reading a company's quarterly report, on-chain data is like having a live camera inside their bank vaults, their boardrooms, and their factories all at once. Because blockchains are transparent, these tools allow you to see exactly what's happening on the network in real time. How many active users are there? Are large wallets, the whales, accumulating or selling? How much revenue is the protocol generating in fees? This is where you stop listening to what people say they're doing and start watching what their wallets are actually doing. It can be complex, and many of these services are subscription-based, but just knowing they exist is a huge step. You can often find the best analysts on Twitter sharing charts and insights from these very platforms. We've now covered community, real-time narrative, and raw data. You've learned how to listen to the crowd, how to track the thought leaders, and how to verify it all against the cold, hard numbers. But raw data is just one piece of the puzzle. How do you understand the story behind the numbers? The grand vision? The core technology that makes it all work? For that, you need to go to the source code of crypto knowledge itself, the white paper. And in the next part, I'm going to show you exactly how to read them and how to understand them without needing a PhD in cryptography. So what exactly is a white paper? Let's strip away the intimidating academic-sounding name. A white paper is simply the founding document of a cryptocurrency. It's the blueprint. It's the business plan. It's the user manual written by the creators, for the world. Before a single line of code is written, before a single coin is mined, there is the white paper. It's a document that says, here is a problem we see in the world, and here is our unique, detailed technical solution. The Bitcoin white paper, titled Bitcoin, a peer-to-peer electronic cash system, is only 9 pages long. 9 pages that launched a multi-trillion-dollar industry. The Ethereum white paper is a bit beefier, but the principle is the same. It lays out the grand vision. Reading a project's white paper is the single most important piece of due diligence you can do. It's like wanting to invest in a car company, and they hand you the original engineering schematics for their revolutionary new engine. Everything you need to know about its potential, its flaws, and its core purpose is right there, before it ever hits the assembly line. But okay, I know what you're thinking. These things are written by cryptographers and computer scientists. They're full of complex math and jargon I'll never understand. And you're not wrong. Some of them are incredibly dense. But here's the secret. You don't need to understand every single equation. You're not trying to rebuild the protocol from scratch. You're reading it like a detective looking for clues. You're looking for logic, for purpose, and for red flags. So where do you find them? The easiest way is to go to a major crypto data site like CoinMarketCap or CoinGecko. Look up any cryptocurrency, and right there on its main page, usually near the top, you'll find a direct link to its white paper. Almost every legitimate project makes this document front and center. If you have to dig through 10 pages of a website to find a link to the white paper, that's your first little warning sign. Transparency is key. Alright, you've found the white paper. You've clicked the link. A PDF opens up. Now what? Don't panic. We're going to use a 5-step framework to break it down and extract the critical information without getting lost in the weeds. Step 1. The abstract and introduction. This is usually the first page or two. Think of this as the movie trailer. It's the project's elevator pitch. In just a few paragraphs, it should tell you everything. What is the problem they are trying to solve? What is their proposed solution? And what makes their solution special or different? When you read the abstract of the Bitcoin white paper, it's crystal clear. The problem? The need for a trusted third party like a bank to process electronic payments. The solution? A peer-to-peer network using a public ledger to prevent double spending. Boom! In 2 sentences, you understand the entire mission. If you read a project's abstract and you're still confused about what they're even trying to do, that is a massive red flag. Clarity of purpose is non-negotiable. If the founders can't explain their idea simply at the beginning, it's often because the idea itself isn't fully baked. Step 2. The problem statement. After the introduction, the paper will dedicate a section to explaining the problem in more detail. This is where you put on your skeptic's hat. Ask yourself one critical question. Is this a real problem that actually needs solving? The crypto space is littered with projects that offer incredibly complex solutions to problems that nobody has. They'll talk about decentralizing the market for rare bird feathers, or something equally niche. A strong white paper addresses a real, painful, and preferably large-scale problem. For Bitcoin, it was the weakness of the traditional financial system. For Ethereum, it was the inability to build complex applications on a blockchain. These are huge, tangible problems. So, as you read this section, don't just take their word for it. Does the problem they describe resonate with you? Have you ever experienced it? If they're solving a genuine pain point, they've cleared a major hurdle. Step 3. The solution and technical breakdown. Okay, this is the part that scares everyone. This is where you'll see diagrams with arrows, mathematical formulas, and words like Byzantine fault tolerance or zero-knowledge proofs. Take a deep breath. Remember, you are not here to get a computer science degree. Your goal is to understand the logic of the solution, not to memorize the formulas. Ask yourself this. Does the solution they propose seem like a logical answer to the problem they just described? You don't need to understand how a cryptographic hash function works on a mathematical level. You just need to understand what it does in their system. The Bitcoin white paper explains that it uses a proof-of-work chain to create a public history of transactions that is computationally impractical to change. The logic is, it's incredibly hard to create, but super easy for anyone to verify. That makes sense, right? It's like a seal on a document that's impossible to forge, but easy to see if it's been broken. Scan this section for the big picture. How does the system reach consensus? How does it secure the network? How are transactions processed? If the paper explains these concepts using analogies and clear, logical steps, that's a great sign. If it's just a wall of impenetrable jargon with no effort to explain the why behind the how, they might be trying to hide a weak idea behind complexity. Don't be afraid to open a new tab and Google a term you don't understand. A 5-minute search on what is proof of stake can unlock your understanding of an entire section. Step 4. The tokenomics. This might be the most important section for any potential investor. Tokenomics is just a fancy word for the economics of the coin or token. The white paper should explicitly detail this. How many coins will ever exist? Is there a fixed supply like Bitcoin's 21 million? Or is it inflationary? How are new coins created? Most importantly, how are the initial coins distributed? This is where you find the biggest red flags. A section on token distribution should show a pie chart or a list. If you see that 50% of the tokens are being given to the team and early advisors, you should run. That means a small group of insiders has immense control and can dump the price on everyone else. A healthy distribution allocates a large percentage to the community through things like a public sale, mining rewards, or ecosystem development funds. It should also mention a vesting schedule. This means the team can't sell their tokens all at once. They get them unlocked over several years, which incentivizes them to stick around and build the project for the long term. If there's no vesting schedule, that's another giant red flag. Step 5. The team and roadmap. Who is building this? A legitimate project is proud of its team. The white paper, or at least the project's website, which should be linked, should have names, pictures, and links to their LinkedIn or Twitter profiles. Are they real people? Do they have experience in software development, cryptography, or business? Or is the team completely anonymous? While Bitcoin was created by the anonymous Satoshi Nakamoto, that is the rare exception that proves the rule. In today's world, anonymity is often a cover for a scam. Then look for the roadmap. This is their plan for the future. What features are they building next quarter? Next year? A good roadmap is specific with measurable goals and timelines. A bad roadmap is full of vague buzzwords like implement AI synergy or expand global marketing. It shows they haven't thought through the actual steps required to achieve their vision. So that's the framework. Abstract, problem, solution, tokenomics, and team. By reading a white paper with this detective's mindset, you transform it from an intimidating academic paper into an intelligence report. You're not trying to understand everything, you're trying to answer the most important questions. Does this project have a clear purpose? Is its solution logical? Are the economics fair? And is the team capable of pulling it off? Reading white papers is a skill, and like any skill, it gets easier with practice. Start with the Bitcoin white paper. It's the gold standard for a reason. Then maybe read the Ethereum one to see a different, more ambitious approach. After reading just 2 or 3, you'll start to see the patterns, and more importantly, you'll start to spot the red flags from a mile away. But a white paper is just a promise. It's a plan on paper. How can you verify that the project is actually doing what it promised? How can you look under the hood of a living, breathing blockchain and see the transactions happening in real time? For that, we need to move from the blueprint to the factory floor. We need to use a tool called a block explorer, and it's the ultimate lie detector in the world of crypto. In the next part, I'll show you how to use one to track any wallet, follow the money, and become a true on-chain detective. Alright, let's put on our detective hats. Every single transaction, every coin sent, every digital contract signed on a public blockchain like Bitcoin or Ethereum is recorded forever. It's written in permanent ink. But this permanent record isn't stored in some dusty, inaccessible vault. It's completely public, like a giant, global bulletin board that anyone can read. The tool we use to read it is called a block explorer. And the most famous one, the industry standard for the entire Ethereum ecosystem, is called Etherscan. Think of it as the Google for the Ethereum blockchain. Now, I could just give you a dry tutorial on how to use it, but that's boring. Let's solve a crime instead. Let's imagine a classic crypto scenario. A new coin, let's call it Rocket Coin, has been hyped to the moon by a huge influencer. People are piling in, the price is soaring. Then suddenly, in the middle of the night, the price completely collapses. It plummets 95%. Everyone who bought in gets wrecked. The community is furious, and they start pointing fingers at the influencer, accusing them of a pump and dump, hyping the coin only to secretly sell all of their own holdings at the peak, leaving their followers holding worthless bags. The influencer, of course, goes on social media and says, "Guys, I'm just as shocked as you are. I'm a victim too. I'm still holding." So who's telling the truth? The angry community or the charismatic influencer? We don't have to guess. We can know for certain. The blockchain doesn't care about feelings or excuses. It only records facts. Our first piece of evidence is the transaction hash. When that massive sell-off happened that crashed the price, it created a huge transaction on the blockchain. Crypto journalists and on-chain analysts would have spotted it immediately. They would have posted the transaction hash, which is like a unique receipt number for that specific event. It's a long string of letters and numbers. Our investigation starts here. We go to the Etherscan website. Simple, just a search bar much like Google. We take that transaction hash, we copy it, and we paste it into the search bar. We hit enter. Instantly, the entire anatomy of that crime is laid out in front of us. It looks a little intimidating at first, but it's simple when you know what to look for. We see a from address. This is the wallet that initiated the transaction, our prime suspect. We see a to address. In this case, it's likely the address of a decentralized exchange like Uniswap, where they swap the tokens. We see the transaction fee, the exact time it happened, everything. But we scroll down to the most important part. Tokens transferred. And there it is, in plain sight. We see 2 lines. The first line shows 50 million Rocket Coin being sent from our suspect's wallet to the exchange. The second line shows what they got in return. $2 million worth of USDC, a stablecoin, being sent from the exchange back to their wallet. The case is already looking bad for our influencer. We've just proven with 100% certainty that this wallet executed the very trade that crashed the market. But the influencer could still say, "That's not my wallet. Someone is framing me." This is where the real detective work begins. That from address is now our main lead. On Etherscan, every address is a clickable link. We click on it. Now we are no longer looking at a single transaction. We are looking at the entire life history of this specific wallet. Every dollar in, every dollar out. Every coin it has ever touched. First, we look at its current holdings. We see it sitting on that $2 million in USDC. We also see it holds a bunch of other cryptocurrencies. Interesting. But where did it get that 50 million Rocket coin in the first place? We look at its transaction history. We can filter by incoming transactions. We scroll back a few weeks before the hype began. And what do we find? A transaction for exactly 50 million Rocket coin being sent into this wallet. And where did it come from? We click on the sending wallet's address. The name of the wallet is tagged right on Etherscan. Rocket coin deployer. The evidence is now overwhelming. Our suspect's wallet received a massive bag of Rocket coin for free, directly from the project's creator, right before the marketing campaign started. They held it while the price pumped and then sold it all at the top. But we can go one step further. Where did that $2 million go? Our influencer needs to turn that digital money into real US dollars to buy a Lamborghini. So we look at the wallet's outgoing transactions. And sure enough, just hours after the big sell-off, we see a transaction for 2 million USDC being sent from our suspect's wallet to a deposit address at Coinbase, a major centralized exchange. This is the classic off-ramp. From here they can sell it for cash and withdraw it to their bank account. The investigation is over. We didn't need a subpoena. We didn't need to trust anyone. We just followed the facts, written on an immutable public ledger. We can now say with cryptographic certainty that the influencer lied. They didn't lose money. They made millions by dumping on their own audience. This is the power of a block explorer. This isn't just about catching scammers. This is a fundamental skill for anyone in crypto. Before you invest in a new project, you can use Etherscan to look at the token's contract. You can see the list of top holders. Is 80% of the supply held by just 10 wallets? That's a massive red flag. It means those 10 people have total control over the price. You can see if the liquidity is locked. You can see if the developers are transparent with their own holdings. It's the ultimate tool for due diligence. The motto in crypto is don't trust, verify. Etherscan and other block explorers for different chains like Solscan for Solana or BSC Scan for Binance Smart Chain are how you verify. They all work on the same principle. They turn the complex, raw data of the blockchain into a human-readable format. Learning to read a block explorer is like an investor learning to read a balance sheet. It gives you an X-ray vision into the market. You can track smart money wallets, seeing what the most successful traders are buying before the news breaks. You can watch the flow of funds into and out of exchanges to gauge market sentiment. You stop being a passive spectator and you start becoming an analyst. You've now seen how the factory floor works. You know how to inspect the products and check the shipping manifests. No one can pull the wool over your eyes anymore because you can check the public record for yourself. But this is a micro-level view. We've learned how to read a single page in a library that contains billions of books. This is essential for forensics and deep dive research. But how do we get a bird's eye view? How do we survey the entire market, compare thousands of different cryptocurrencies, and spot trends as they're happening? Reading the ledger is one thing, reading the entire market is another. For that, we need to move from the detective's office to the stock market trading floor. We need to use the card catalog for this giant library to find the blockbusters and avoid the duds. Next, we're going from on-chain detective to full-blown market analyst. And the first tool in any market analyst toolkit isn't some complex, high-frequency trading bot. It's the grand central station of crypto, the place where every journey begins. I'm talking about the data aggregators, the kings of which are CoinMarketCap and CoinGecko. Think of these sites as the New York Stock Exchange ticker, but for the entire crypto universe. They are your dashboard, your command center for the raw, unfiltered numbers that move markets. When you first land on one of these sites, it can feel like you're staring at the flight departure board at the world's busiest airport. Thousands of names, flashing numbers, percentages in red and green. It's overwhelming. But you only need to focus on a few key metrics to instantly get a sense of the landscape. Forget everything else for a moment and look at these 4 things. Price, market cap, 24-hour volume, and circulating supply. Price is obvious. It's the number everyone obsesses over. But I'm going to tell you a secret: price by itself is one of the most misleading metrics in all of crypto. It's a vanity metric. Seeing a coin is worth a fraction of a penny and thinking, wow, if this just gets to $1, I'll be rich, is a trap that has snared millions. It's the financial equivalent of judging a book by its cover. To understand the real story, you need its partner in crime. Market cap. Market cap is simply the price of a coin multiplied by its circulating supply. This is the true measure of a project's size and significance. It's the network's total value. Let me put it this way. Would you rather own 1% of a $10 million company or 50% of a $10,000 company? The percentage you own, the price per share, doesn't matter as much as the total value of the underlying asset. Crypto is the same. A coin priced at $10 with 1 million coins in circulation has a market cap of $10 million. A coin priced at 1 cent with 100 billion coins in circulation has a market cap of $1 billion. That 1 cent coin is 100 times larger than the $10 coin. It would take monumentally more money, more demand, to double the price of that 1 cent coin. Market cap is the great equalizer. It tells you if you're looking at a heavyweight contender like Bitcoin or Ethereum, or a featherweight newcomer trying to land a lucky punch. Next up is 24-hour volume. If market cap is the size of the company, volume is how much business it's doing today. It's the total value of a coin that has been traded in the last 24 hours. This number is your truth detector. It tells you how much real, active interest there is in a project. A coin can have $1 billion market cap, but if its daily trading volume is only a few $1,000s, that's a massive red flag. It's like a giant, beautiful store in the middle of the desert with no customers. It means the market is thin, illiquid, and incredibly easy for a single wealthy player to manipulate the price up or down. High volume, on the other hand, means there's a healthy, bustling marketplace of buyers and sellers. It means you can get in and out of a position without causing a massive price swing. It signifies genuine, widespread interest. Finally, there's the dance between circulating supply and total supply. This is one of the most critical, yet overlooked metrics for long-term success. Circulating supply is the number of coins that are publicly available and circulating in the market right now. Total supply is the total number of coins that will ever exist. The difference between these two numbers is a ticking time bomb of potential inflation. Imagine a project has 100 million coins in its total supply, but only 10 million are circulating today. That means 90 million coins are currently locked up, waiting to be released to early investors, the development team, or as network rewards. When those coins unlock and hit the market, it's the economic equivalent of a massive wave crashing on the beach. It creates immense selling pressure, potentially diluting the value for everyone who bought in early. A good project will have a transparent, predictable release schedule. A questionable one will have a huge chunk of tokens unlocking soon with little explanation. CoinGecko and CoinMarketCap put this information front and center. Ignoring it is like ignoring the weather forecast before sailing into the Atlantic. So, with these aggregators, you can sort the entire crypto market by these crucial metrics. You can filter for projects in specific categories like gaming or artificial intelligence. You can see which coins are trending, which exchanges they trade on, and get links to their websites and white papers. It is the foundational layer of your research. But it's just that, the foundation. It gives you the what. To understand the why and the when, we need to look at the story of the price itself. For that, we turn to the artist's canvas for the market analyst. TradingView. TradingView is the gold standard for charting. While you can see basic charts on CoinMarketCap, TradingView is where you go to see the market psychology painted in real time. Now, the world of technical analysis, or TA, is a deep, controversial rabbit hole of complex indicators and patterns that can look like voodoo to a beginner. But you don't need to be a wizard to get immense value from it. At its core, a price chart is just a visual history of supply and demand. It's a story of fear and greed. The first thing you'll see are candlesticks. Each candle tells the story of a specific time period. A day, an hour, a minute. A green candle means the price closed higher than it opened. A red candle means it closed lower. The little lines sticking out the top and bottom, called wicks, show the highest and lowest prices reached during that period. Just by looking at the size and color of these candles, you can start to feel the rhythm of the market, the tug-of-war between buyers and sellers. But the most powerful and simple concept in all of charting is support and resistance. Think of it like a tennis ball bouncing in a room. The floor is support. It's a price level where, in the past, buyers have consistently stepped in and pushed the price back up. The ball hits the floor and bounces. The ceiling is resistance. It's a price level where sellers have historically taken profits, pushing the price back down. The ball hits the ceiling and falls. Identifying these levels on a chart is as simple as drawing a horizontal line connecting the previous lows and highs. Why does this matter? Because millions of other traders are looking at the exact same charts. These levels become self-fulfilling prophecies. When a price is approaching a strong support level, traders prepare to buy, adding to the bounce. When it nears resistance, they prepare to sell. The real excitement happens when a price breaks through one of these levels. Breaking above resistance is like the ball smashing through the ceiling into the room above. It signals a powerful bullish move. Breaking below support is like falling through the floor, a strong bearish signal. This is the absolute bedrock of understanding price action. TradingView allows you to draw these lines, add simple indicators like moving averages, which smooth out price action to show you the underlying trend, and save your analysis. It transforms you from a passive observer into an active analyst, letting you form your own thesis about where the price might go next based on historical behavior. Now we have the encyclopedic data from CoinMarketCap and the psychological roadmap from TradingView. We've gone from amateur to analyst. But to truly level up, to get the kind of insights that separate the smart money from the crowd, we need to tap into professional-grade research. For this, we turn to a platform like Messari. If CoinMarketCap is the raw data dump, Messari is the curated intelligence briefing. It's built by professional analysts for investors who want to go deeper than just the numbers. While much of its platform is for paying subscribers, its free tier offers an incredible amount of value. Messari provides detailed profiles on thousands of assets, but instead of just listing stats, they provide qualitative analysis. They write long-form research reports, explain complex tokenomics in plain English, and track major trends and narratives shaping the industry. Are you hearing a lot about real-world assets or DePIN, but don't really know what they are? Messari will have a report breaking down the entire sector, who the key players are, and what the potential is. They'll give you charts and data that you won't find on the basic aggregators. They help you connect the dots between a project's technology, its market performance, and its place in the broader crypto ecosystem. Using Messari is like having a team of Wall Street analysts working for you, sifting through the noise to deliver the signal. It helps you build a fundamental conviction in a project that goes far beyond what a price chart can tell you. We've now built a powerful trifecta of resources. We have the bird's eye view of the entire market, the microscopic view of an asset's price history, and the professional intelligence report on its fundamental value. We've analyzed the data, we've read the charts, and we've studied the research. But numbers and lines on a screen don't tell the whole story. A project is only as strong as its community and its creators. A token can have perfect fundamentals, but if the community is toxic or the founders are ghosts, it's destined to fail. Next, we're going undercover. We're diving into the social layer of crypto to figure out what's real and what's just hype. Alright, let's pull on the digital trench coat, because this is where the real detective work begins. The social layer of crypto isn't just a part of the research process. In many ways, it is the process. This is where narratives are born, where communities are forged, and where projects live or die in real time. Forget the sterile white papers for a moment. We're going to where the people are, because in a market driven by belief, people are the ultimate data point. Our first stop, the unavoidable, chaotic, and absolutely essential town square of the entire industry. Twitter or X, whatever you want to call it. If a crypto project exists, it has a presence on Twitter. If it doesn't, that's your first giant flashing red flag. But just having an account isn't enough. Twitter is a masterclass in signal versus noise. Your job is to become a master filter. First, you need to curate your feed like a museum curator. Don't just follow blindly. Create lists. You should have a list for project founders and devs, a list for venture capitalists and investors, a list for data analysts, and even a list for skeptics and contrarians. Why? Because this allows you to check the temperature of different segments of the market on command. When a big announcement drops, you can see what the builders think, what the money thinks, and what the critics think, all in separate clean feeds. So what are you looking for? On a project's official account, you're looking for consistency and clarity. Are they shipping code and announcing real partnerships? Or are they just posting memes and vague promises of soon? Look at the engagement. Is it genuine discussion in the replies? Or is it a sea of bots all saying LFG and to the moon? Bot-heavy engagement is a classic sign that a project is paying for fake hype. Next, you look at what the respected figures are saying. Are well-known developers in the space interacting with the project's posts? Are sharp-witted venture capitalists analyzing its tokenomics? Or is the only support, coming from paid influencers with laser eyes in their profile pictures who shill a new coin every 3 days. The quality of a project's supporters on Twitter is a massive tell. It's the difference between a project being embraced by the intellectual core of the industry versus one that's just trying to manufacture a quick pump. And don't forget that skeptics list. Following smart critics is one of the best ways to protect yourself. They are the ones who will publicly question a project's claims, point out flaws in its code, or highlight sketchy details about the founding team. They act as your free and often brutally honest due diligence department. Twitter is where the battle for narrative happens. Learning to read the battlefield is a non-negotiable skill, but Twitter is the public square. To see what's really going on, you have to go inside the clubhouse. And in crypto, the clubhouse is almost always Discord. If you're serious about investing in a project, joining its Discord server is mandatory. This is your direct line to the team and the core community. And when you enter, your first job is to just listen. Be a fly on the wall. Get a feel for the vibe. Is the general chat filled with intelligent questions about the roadmap and technology? Or is it just a constant stream of people asking when price go up? And when marketing? A community obsessed only with price is a community built on weak hands, ready to dump on you at the first sign of trouble. A community that geeks out about the technology is one that's there for the long haul. Next, put the team to the test. Go into the appropriate channel and ask a tough, but respectful question. Something like, I saw in the white paper you plan to achieve X, but competitor Y is already doing that. What's your unique advantage? Now watch what happens. In a healthy, confident project, a team member or a knowledgeable community mod will likely engage with you, providing a thoughtful answer. They welcome scrutiny. In a scam or a low-quality project, one of two things will happen. Your question will either be completely ignored, buried under a flood of memes, or you'll be banned. Getting banned from a Discord for asking a legitimate question is the equivalent of a 5-alarm fire. Run. Pay close attention to the hashtag announcements channel. Is the team providing regular, substantive updates? Or is it weeks of silence followed by a low-effort partnership announcement with a company no one has ever heard of? Transparency is key. Look for developer diaries, technical updates, and clear progress on their stated roadmap. Discord is also where you find the alpha, a term for valuable early-stage information. By being an active, positive member of a community, you'll often hear about new features, upcoming integrations, or airdrop opportunities long before the general public on Twitter does. You're moving from being an outsider looking in to an insider who understands the project's heartbeat. Now let's talk about Discord's wild cousin, Telegram. While many projects also use Telegram, it serves a slightly different function and comes with much bigger risks. Telegram is often used for massive, global community chats that can be incredibly chaotic and difficult to follow. It's also the platform of choice for scammers. You will be inundated with private messages from people pretending to be project admins, offering you special deals, or asking you to validate your wallet. Never ever click links sent to you in a private message on Telegram. Never give anyone your seed phrase. Admins will never DM you first. The primary, safe use for Telegram is the official announcements channel for a project. This is a one-way street where the team broadcasts updates. It's a good, clean way to stay informed without wading into the treacherous waters of the main chat groups. Use it for official information, but treat the open chat groups with extreme caution. They are hunting grounds for the unsophisticated investor. Finally, we have the old guard of internet communities, Reddit. While not as central as Twitter or Discord, Reddit provides a unique perspective. Subreddits like r/cryptocurrency serve as a massive public forum, a place to gauge the sentiment of the broader retail market. The daily discussion threads are particularly useful. They are a fire hose of news, fear, greed, and memes, giving you a raw, unfiltered look at what the average crypto user is thinking about. For specific projects, you'll want to visit their individual subreddits. Here you'll find longer, more detailed discussions than you typically would on other social platforms. You can find guides, tutorials, and deep dive debates about the project's future. However, be aware that many project-specific subreddits can become echo chambers. They can be heavily moderated to suppress negative sentiment. So it's important to balance what you read there with the more critical takes you might find on Twitter or in other, more general crypto forums. So let's put it all together. Your social investigation of a new project should be a multi-platform strategy. You start on Twitter to understand the high-level narrative and see who is backing it. Then you join the Discord to interact with the team and the core community, testing their transparency and gauging the health of the culture. You subscribe to the Telegram announcements for official updates, while steering clear of the scams. And finally, you browse the Reddit community to see what the broader retail base is saying, and to find longer-form due diligence. Each platform gives you a different piece of the puzzle. Twitter is the resume, Discord is the job interview, Reddit is the public opinion poll. By using them all in conjunction, you move beyond the hype. You stop being a passive recipient of marketing and become an active investigator, piecing together the clues to determine if a project's community is its greatest asset or its most glaring liability. You've analyzed the code, you've read the white paper, and now you've read the room. But there's one final layer of truth, one that can't be faked or spun. In crypto, we have a superpower that exists in no other asset class. The ability to see every single transaction, every wallet, and every smart contract interaction, all recorded immutably on a public ledger. We can follow the money, and that's exactly where we're going next. This is the ultimate source of truth in crypto. Forget the headlines, forget the hype on social media, forget what some self-proclaimed guru tells you. The blockchain doesn't lie. It can't. And learning to read it is like being handed the architectural blueprints to the entire financial system of the future. The tools we're about to cover are your magnifying glass, your X-ray vision, and your direct line to the ground truth. First up, and arguably the most fundamental tool in any crypto investor's arsenal, is the Block Explorer. This is the Google of the blockchain. For Ethereum and most of its related networks, the king is Etherscan. For Solana, it's Solscan. For Bitcoin, it's blockchain.com or mempool.space. Nearly every major blockchain has one. These websites might look intimidating at first, like a wall of numbers and weird addresses, but they are your best friend. Let's walk through a scenario. You hear about a hot new token, let's call it Rocket Coin. Everyone is talking about it. Before you even think about putting a single dollar into it, your first stop is the Block Explorer. You find the token's contract address, a long string of letters and numbers, and you paste it into the search bar. Instantly, you have a dashboard of critical information. You can see the total supply of Rocket Coin. You can see how many people are holding it. But here's where it gets powerful. You can click on a tab that says, Holders. This shows you a list of every single wallet that owns Rocket Coin, ranked from largest to smallest. Is the number one wallet holding 80% of the supply? If so, that's a massive red flag. It means the founder or a single entity could dump all their tokens on the market at any moment, crashing the price to zero. This is one of the easiest ways to spot a potential scam or rug pull. Conversely, if the ownership is widely distributed among thousands of wallets, that's a much healthier sign. You can also look at the Transactions tab. Are people actively buying and selling? Or was there a flurry of activity a month ago and now it's a ghost town? Etherscan tells you the story that the project's marketing team won't. It's an incorruptible ledger of a project's real health. But Block Explorers are just the beginning. They give you the raw, unfiltered data. The next level up is to use platforms that take that raw data and turn it into beautiful, easy-to-understand charts and dashboards. The undisputed champion in this space, especially for the curious analyst, is Dune Analytics. Think of Dune as the Wikipedia of on-chain data, built by a global army of crypto detectives. It's a platform where anyone can write queries to pull data directly from the blockchain and build dashboards to visualize it. And the best part? It's all public. You can go on Dune right now and find a dashboard that tracks the daily active users of a popular crypto game. You can find another that compares the trading volume between two competing decentralized exchanges. You can see exactly how much revenue a lending protocol is generating in real time. This is information that in traditional finance would cost you tens of thousands of dollars from a proprietary data provider. On Dune, it's free, built by the community. The key to using Dune is to find analysts you trust. You'll start to see the same names pop up, the wizards who build the most insightful dashboards. You can follow them, see what they're building, and essentially piggyback on their genius. It's like having a team of hundreds of world-class data scientists working for you around the clock, uncovering trends you would never find on your own. Now, if Dune is the community-powered encyclopedia, our next resource, Nansen, is the private intelligence agency. Nansen takes on-chain analysis a step further by not just showing you what is happening, but who is making it happen. Their secret sauce is wallet labeling. They spend an immense amount of time and resources identifying which blockchain addresses belong to whom. They know the wallets of major venture capital firms like Andreessen Horowitz and Paradigm. They know the wallets of crypto exchanges like Coinbase and Binance. And most importantly, They identify and track the wallets of what they call smart money. These are wallets that have a proven history of making incredibly profitable trades. They were early to new projects that went on to do 100x. They consistently buy low and sell high. Nansen aggregates the activity of all this smart money into a single feed. Imagine being able to see in real time that a cluster of the most profitable traders in the world are all suddenly starting to accumulate a new unknown token. That is an incredibly powerful signal, one that often precedes a major price movement. It's the closest thing you can get to legally seeing an insider's playbook. You can set up alerts to notify you the moment a major VC fund moves millions of dollars into a new DeFi protocol. This is alpha, pure and simple. It's moving beyond just reacting to the market. It's about anticipating it based on the actions of the most sophisticated players. While Dune and Nansen are fantastic for analyzing specific projects or wallets, sometimes you need to zoom out and look at the health of the entire market. For this macro view, we turn to platforms like Glassnode and CryptoQuant. These are the tools for understanding the vital signs of the major blockchains themselves, like Bitcoin and Ethereum. Think of them as the Federal Reserve's economic dashboard, but for the crypto world. They track network-level metrics that can give you a powerful sense of market sentiment. For example, they track the flow of coins to and from exchanges. When a massive amount of Bitcoin is suddenly moved from private wallets onto exchanges, what does that suggest? It often means those holders are preparing to sell. It's a bearish signal. Conversely, when Bitcoin is flowing out of exchanges at a high rate, it suggests people are moving their coins into long-term storage or cold storage. They're not planning to sell anytime soon. That's a bullish signal, indicating strong holding conviction. Glassnode also pioneers incredible metrics like net unrealized profit/loss, or NUPL. It sounds complicated, but the concept is simple. It looks at every coin on the network, checks the price it last moved at, and compares it to the current price to determine if the overall market is in a state of profit or loss. When this metric gets into the blue euphoria zone, it has historically signaled that the market is overheated and a major correction is likely. When it falls into the red capitulation zone, it has often marked the absolute best time to buy. Using these tools is like having a weather forecast for the crypto market. It doesn't predict the future with 100% certainty, but it dramatically increases your odds of being prepared for the storm or knowing when it's clear skies ahead. From the granular transaction on Etherscan, to the project-level trends on Dune, to the smart money movements on Nansen, and the macro market health on Glassnode, these on-chain tools give you a layered, multifaceted view of the crypto landscape that is simply impossible to get anywhere else. You learn to trust the data, not the drama. You are no longer just a passenger, you're a navigator, with a real-time map of the entire ecosystem. But all this data, all this on-chain analysis, it only tells you what's happening now or what has happened in the past. It's a reflection of actions already taken. What if you could find out where the smartest people are looking next? What if you could get into the rooms where the next big narrative is being born, before the first dollar is even invested? That requires moving from the blockchain to the chat room. Welcome to the digital frontier's town square, its back alleys and its high-tech laboratories, all happening at once. I'm talking about crypto Twitter, now known as X. If the blockchain is the immutable ledger of what has happened, crypto Twitter is the chaotic, real-time brainstorm of what might happen next. It is, without a doubt, the single most important social resource in this entire space. But it's also a raging river of noise, scams, and utter nonsense. Navigating it is an art form. Forget just following big exchanges or crypto celebrities. The real value comes from curating specialized lists. You need a list for founders and developers, people like Vitalik Buterin of Ethereum, Anatoly Yakovenko of Solana, Stani Kilchov of Aave. You're not following them for price predictions. You're following them to understand their vision, their technical hurdles, and their philosophy. Their stray thoughts on a Tuesday morning can reveal more about the future of their protocol than a dozen press releases. Next, you need a researchers and analysts list. These are the brains that connect the dots. Think of people like Chris Burnisk, a master of crypto thesis development, or the anonymous accounts like Heisu, who produce institutional-grade analysis for free. They dissect tokenomics, debate governance models, and challenge popular narratives. Following them is like having a team of PhDs working to sharpen your own thinking. Then create a data nerds list. This is where you follow the creators of the best Dune dashboards we talked about, the lead analysts from Nansen and Glassnode, and the on-chain wizards who can spot a whale moving funds before it ever hits the news. They translate the raw data of the blockchain into actionable insights and compelling charts. And finally, you need a skeptics and bears list. This might be the most important one. If you only follow people who are bullish on your favorite projects, you're living in an echo chamber. You need to follow the intelligent critics, the people who poke holes in the hype, who point out the security flaws, and who remind you that 99% of projects will likely fail. They are the antibodies of the ecosystem, and they will save you from making catastrophic mistakes. X is the global nerve center. But for the ground-level, community-specific alpha, you need to go deeper. You need to join the Discord and Telegram groups for the projects you're most interested in. This is non-negotiable. If you're invested in a protocol without being in its Discord, you are flying blind. Think of it this way: Twitter is the public press conference. Discord is the internal all-hands meeting. It's where the core team gives daily updates. It's where community members debate governance proposals before they're even officially submitted. It's where you find out about a critical bug, a new integration, or a surprise airdrop minutes after it's decided, not hours later when it hits a news site. But again, it's a fire hose. A popular project's Discord can have dozens of channels with thousands of messages an hour. The key is to be surgical. When you join, immediately mute all the channels except for announcements, development updates, and governance. These are the high-signal, low-noise channels. Spend your time there first. Then, venture into the general chat to gauge community sentiment. Is it excited and collaborative? Or is it angry and full of complaints about the price? The vibe of the community is often a leading indicator of a project's future success. And for those really looking to skate to where the puck is going, the conversation is starting to migrate to new, decentralized social media platforms like Farcaster and Lens Protocol. The user base here is smaller, but it's incredibly dense with the builders and thinkers who are pioneering the next wave of crypto. The signal-to-noise ratio is, for now, off the charts. Getting established on these platforms today is like getting on Twitter in 2008. The conversations are more technical, more nuanced, and less performative. It's a glimpse into the future of the crypto community itself. So there you have it, the complete roadmap. We've journeyed from the absolute basics, the digital storefronts like Coinbase and the price tickers like CoinMarketCap. We moved on to the foundational documents, learning to read white papers and navigate project docs. We armed ourselves with institutional-grade research from firms like Messari and The Block, learning to separate the signal from the noise. We then became digital detectives, using block explorers like Etherscan to trace the flow of value and powerful dashboards on Dune to analyze the health of entire ecosystems. And finally, we've plugged directly into the hive mind, learning to navigate the real-time flow of ideas on X and the intimate community hubs of Discord. You now have a toolkit more powerful than what the most sophisticated hedge funds had just a few years ago. But the goal of this entire journey was never just to teach you where to look. It was to teach you how to think. It was to give you a framework for independent verification in a world that begs you to trust blindly. The mantra "don't trust, verify" is not a suggestion. It is the fundamental law of survival and success in this space. Every resource we've discussed is a weapon in your arsenal to fight against hype, misinformation, and your own emotional biases. When a YouTube influencer tells you a coin is the next 100x, you won't just believe them. You'll pull up its Messari profile, you'll check its on-chain metrics on Dune, you'll scrutinize its token distribution on Etherscan, and you'll see what the smartest developers are saying about its tech on Twitter. You will form your own thesis. This knowledge is the ultimate asset. It's more valuable than any single coin or token, because markets will cycle, narratives will change, and projects will rise and fall. But the ability to critically analyze this new digital world, to understand its mechanics, and to identify genuine innovation amidst a sea of speculation, that is a skill that will compound in value for the rest of your life. You are standing at the very beginning of a new technological and financial paradigm, a shift as fundamental as the internet itself. It's a world that is complex, often intimidating, and relentlessly fast-paced. But it is no longer a world you have to watch from the sidelines. The tools are no longer reserved for insiders and venture capitalists. They're available to you right now. The rabbit hole is deep, and our journey through these resources is just the first step. But for the first time, you have a map. You have a compass. You have a light to carry into the dark. The questions that remain are no longer "where do I start?" but "how far will I go?" What will you build? What will you discover? What role will you play in the foundation of this new digital economy? Your expedition starts now. Go explore.